All righty, everyone. Welcome to the Hurley Investments Financial Services Commentary. Today is Tuesday, August 8th of 2017. I just made the comment for those that were here before, that were here that I started this before I started recording. We will not have anything on the 15th. My plan is to get something out to you, a link and so forth, but in all honesty, I can't even commit to that. So, with that said, do not plan on being here next week. At myhurleyinvestment.com, I will most likely have something posted for you because my family has an invite to go and play, and we're going to do one last playing before we head to back to school and so forth. So if I can make a couple comments here, I want to start off with the markets, and I want to insert a couple quick pictures to go over what's happening and why. With that said, I should probably ask you though, what do you guys see that's happening and why? If you want to explain this week or the past week since Tuesday, what's happening in our market and why? Excuse me. Lance, it's all about the earnings, baby, 10 days in a row. Um, that is one way to describe it. In fact, that's probably a pretty good way to describe it. It's all about the earnings, baby, 10 days in a row. And I'm assuming you're talking about the Dow Jones Industrial Average being up for a record 10 days in a row, and it's not a record for the year. It did that back in February. But yes, we've had an amazing run on 30 stocks. But again, it's only 30 stocks. Some have gone in and out. That's why I was going to bring up the Dow. An amazing run. It's even overbought still. Looked like it was going to come down, and boy, it keeps going. With that said, I'm going to make a comment here from Maud. No Fed issues. In fact, I've heard talk on both Bloomberg and CNBC. Fed is done. They're going to go through rebalancing and having some assets run off their books that should just be treasuries. It might be some of the funds and the bond funds that are backed by our government, but we might be only looking at 2 interest rates this year. 2 interest rate hikes this year is what I mean. I'd probably bet we'd have one in December like we have in the past, but Maud, excellent way to say it. No Fed issues, no thought of increasing interest rates. If I put this in here though, I want to bring up the chart. Just notice in general, the Dow is still overbought. Hasn't been for a huge time, but to make a 10-day tear up, we're going to run into some overbought territory. Expect a bit of a pullback just to get us out of overbought territory. S&P, still bullish, kind of more going sideways, but we had a good pop today until our president opened up his mouth and said, well, we're going to unleash what the world has never seen on you, North Korea. Pretty interesting. Could he have just let some sanctions go out? Probably. Could he have waited until maybe they did one more test of a missile and shot it down? Probably, but of course not. What does our president say? He makes the comment, any more saber rattling or missile launches, we're going to unleash hell like the world has never seen before. Way to go, Trump. And then we still have, even though we've had a bit of a pullback, a pretty bullish run on the NASDAQ. Pretty interesting because for a while when Trump first got elected, the NASDAQ took a pretty good hit. The expectation was he was going to crack down, but I don't know what they're going to crack down on, because you would expect, excuse me everyone, I just sneezed in your ear there. I do apologize. You would expect with the regulation, the regulations getting less and less and less, you'd expect to see primarily the technology companies really take off, and they haven't. They didn't until here most recently, of course. So what's happening right now, or some comments I was going to bring about earnings and stocks, and I'm going to primarily put in here the Dow Jones Industrial Average, which is equal to 30 stocks only, right? Have been on a 10-day tear. Haven't seen it on the S&P, haven't seen it on the NASDAQ, but we have had a run here. With that said, I want to bring up one of my stocks, and I want to bring up Disney, because I'm kind of excited for Disney. Disney, yet again, in my mind, had a pretty good earnings. I have not dug through their numbers. Media was atrocious, and media was atrocious all the way across the board. So it's not just ESPN, it's everywhere. But does anyone know what was the beauty part of their earnings call? Netflix. They're going to Netflix it. Taking content from Netflix and starting their own channel. They're going to get paid the full amount, not a license fee. Good comment, David. Yes, they are going to do their version of pay or buy Disney films. Now, I like the idea. It's a good idea. Will they have enough content to garner a Netflix type following? So earnings missed on revenue, but beat on earnings per share. I actually don't know what the guidance was. I don't know if take a quick peek. I don't know about their guidance, but I do know in the extended hours they're down to 102.92, which is down $4.06 or 3.8%. I'm going to come back to that in a minute. Not what I'm looking for. Sorry, guys. So after hours, 3%. It missed revenue, it missed expectations. So I don't even know what their guidance was. Shame on me. But the beginning missed on revenue. Media, and this isn't just ESPN, media took a huge hit today, and they are down $4.06 after hours, which is a whopping 3.8%, sitting at 102.92. 92. So, reason why I'm bringing this up is because guess what? They have already fallen to their lower end support, breaking through the 50 and the 200 day. Anyone know what the next support level is for these guys? Anyone know what the next support level is for these guys? I think you'll see 100 there. In all honesty, Lance, yes, you could make a case for 88. Sorry, guys. So, if you bring in a chart that's a little bit more, 88, they even attached 86 intraday, but you're probably going to see a stop at 100. It's a round number. Couldn't quite get above it. And I know it's been a while, but couldn't quite get above it. You have a little gap there in December. August, July, and June, couldn't get above it. Another gap there back in May on a drop. Probably it's the round number of 100. Then you could look at 94. Then you could look at 90. So, someone tell me, why am I excited for Disney to be heading back down? Why would I be excited to see Disney heading back down? I love Maud's comment. You are correct, David. I've got long puts in place. Fred, you don't know why. Please tell me. Fred, you'll learn this in the education, I'm sure. And Maud made the comment, more shares for me. Definitely. I happen to have Disney protected at 109. Thank you, Abraham. I've got it protected at 109. I really struggled today to see if I was going to drop it back on down. Kevin, why do you protect it at 109? In fact, if you're one of my clients, you got an email that said we're protected at 107. Taking a look at August, you typically don't see Disney make a run until October. In fact, they look horrible through August. They kind of always have. So, when it went from 107 up to 109, almost 110, I thought, I can protect at 109. I'll protect $2 more at like 68 cents, so I'm going to get an extra dollar in change. And historically, at least the last couple years, they haven't done very well in August. They pick up around Christmas. They pick up after a Star Wars movie, after a new Avengers movie where they make tons of money. Yes, they're leading the box office in sales this year. But it's like people don't remember that even though media is 48% of their business. There's a ton of cost in media. A ton of cost in media. And when there's a ton of cost in media, um, there's a ton of cost in media. The profitability of everything really comes from, how would I say it? The profit is from the movie side right now, not the media side. Um, I'm going to crunch some numbers, so I'm going to go over Disney with you guys in in uh, next week, or that'll probably be my little spill as I crunch the numbers. But people have been worried about ESPN for so long, and I did the numbers some time ago, probably a year ago, and it was like 4% of their profits was all. Yes, it might be 48% of the revenue, but it costs so much to create the media, to pay for the media, to stream the media, that their profit, or their cash cow, has come from amusement parks and from from the movies. It has not a whole lot to do with the media. It doesn't have a whole lot to do with ESPN. In fact, it's kind of, I don't understand why people aren't understanding the numbers. So I'm going to try to go through the numbers with you next week. But the good news is, just for a simple story here, the good news is I'm going to see if I can't pick up another 10% more shares of stock on Disney with drop down being able to protect them at 109. And if they go through the 100, I'm adding a second set on to protect down to 88. So let me just get through some of the everyday stuff. Stock trading because the earnings were the market in this week. I'm going to say lower because media and retail sales finish up the week. If I went through with you, still think we're going to have a 2% plus August. Even though August is the second worst month, I would expect to see it go higher. When we look at earnings, in all honesty, the first part of the week was media. And obviously today, I'm just going to put in here CVS, Joe Wind, see what else we have, Fossil, Hertz, GoDaddy is in here. Monster is in here. Priceline is in here today. Zillow and Disney. Wednesday, Jamba Juice, Crocs. Yes, I still follow Crocs. Office Depot, Wendy's, Check in the Box, and Nettie's is in here. Thursday we hit the bigger earnings. Dillard's, Kohl's, Macy's, Nordstrom's, Nvidia would be an interesting one, and then JCPenney on Friday. So not a whole lot here. In all reality, I remember hearing last week people talking about economic reports, and I didn't see it. I'm not sure what they're looking at or what economic reports are all that important this week, because it's just not a huge week. We got productivity, We got wholesale inventories. We have unit labor costs. None of these typically move markets here. Thursday, initial continuing claims, and the interesting talk that someone's trying to do is they're trying to make inflation sound important. We haven't had inflation. It doesn't move that fast in our country. And so, in all honesty, there's no reason why inflation is going to really stand out. Internationally, it's a quiet international week. We have Japan that has a little bit of an interest because you have their machine orders and their PPI. And then the next thing I wrote down was on Sunday. We'll start our Sunday talks are again Japan has the GDP. More importantly, though, China has industrial production and they have retail sales. So not much going on. When we talk about how we go to trade, yes, let me bring up Costco. And why didn't I get out at 159? Because they've bounced back to 157. People are still going to go, Kevin, I'm not impressed with that. Because they have bounced back to 157.75 is where they closed at. Because I have until June 2018, because my first exit point is at a 50% to 75% profit. Someone made the comment, well, isn't this just dead money? And I said, of course it's not just dead money. If it was just dead money, for crying out loud, I wouldn't be in it. But yes, had a pretty interesting drop. In fact, I wonder, I'm looking at the new chart, having a pretty good year, a $773,000 gain this year. Let's take a quick peek. Options House was purchased by E-Trade. So it'll be interesting to see what their new stuff looks like, but no data available, huh? Well, that's pretty pathetic. I do need to go through their system. I thought I'd start to use their stuff a little bit, but it's not really helping me out. So we had a couple days pullback. Nothing that made me worry about, but I did have a couple people say, oh my gosh, you didn't get out at 159. And my short answer is no. I'm looking for a longer term play than 159. I would have waited till they got up to 162, 164. It might have been back then. So no. I'm not really, it wasn't my game plan. I wasn't going to get out then. I'm looking for a better return. Questions? What questions do you guys have for me? Lance, should I have gotten out? Lance, the trade is still on. So the jury's still out there. I don't know if I should have gotten out yet. I don't have an answer for you. The short answer is maybe, but I'm looking to see it get up significantly higher to that 170 range before I was considering getting out. So was up at 188. They had great same-store sales that were up 5%. So I think with the good earnings and with them saying not important, it's just not important to worry about Costco right now, and we'll work on something online later. I think we'll be okay. I think they'll be doing just fine. So to say if I should have gotten out or not, I don't. You can't say right now. It's not an issue. Fred, welcome, Fred. Yes, these occur every week. I try to have these out every week where you guys are able to hear what I'm thinking. If you miss it, I put it on My Hurley Investment. It's singular there, myhurleyinvestment.com. But yes, the short answer is it's been a pretty good year. I am bragging a little bit. I let you guys see in general some of the student stuff. Year-to-date market rate 773 on, what should have been about 5.75 million. I'm up about 13.4%. That doesn't mean every person's account is up that way. Some are not, some are, but we had some good earnings, and we're riding the coattails of Baidu. And I am a registered investment advisor that manages money for clientele. Abraham made the comment, Visa looks good, but a bit overpriced. In fact, you'll see Visa go back to last week, and Visa usually has a bit of a fall the last 3 to 4 months of the year, which doesn't make any sense because that's probably going to get used the most. But yes, Visa, I'm capped at 100 right now with the 95 short call at about $5 a credit. My expectation is Visa will pull back to that 95 range in the next couple months, where I can uncap that and roll it out and up another year for some more money. Visa is definitely overpriced comparatively speaking, except you have to count in that they're working with PayPal and they bought Visa Europe, which could double their revenue in a year. In financials, which three equities are you looking at currently best qualified for collaring? If I was looking at equities, I still love Bank of America. Citi is my second. I actively have some positions in both of those. And I think Zions Bank is a third one, a regional that has a lot of opportunity to go up to 60. So for the three equities that were in financials, Bank of America would run first. I think Bank of America can easily get up to 30, if not 32 by the end of the year. Citigroup, they talk Citi going up to 100. I probably don't see it much higher than 80, 81. And Zions Bank, which right now is at 46, I think could be up at 60 at the end of the year. So that'd be my three picks for financials. Good questions. Any other questions? So you guys know I will do some work on putting out some information here in regards to what I see. I've got a couple good things here. Otherwise, all right, hey, thanks, Abraham, and thanks, David and Lance. Guys, have a great evening. I appreciate your time. I will not be here next week, but I will try to get something put together for you. And again, it's primarily going to be most likely me working through what I see in Disney and why I still trade it. You guys take care. Have a wonderful night, and look forward to seeing you in 2 weeks. Bye-bye.